Welcome back to On the Money. With interest rates expected to go up again next week and housing prices well above pre-pandemic levels, buying your dream home can feel incredibly stressful.
Yeah, but fear not. This morning, we are going to help you make it just a smidge easier. And to do that, we brought in NBC News senior business analyst Stephanie Ruhle. She's got some home buying help.
Thanks for saying a smidge easier, because I am not here to say, no problem, not stressful.
No.
It's totally stressful.
I mean, so let's start here. I mean, with interest rates again set to go up once again, how do folks even know if they can afford to buy that home they've been looking at?
Okay, there's no magic button around should I buy, should I rent, but there is a formula, so you can do the math. And there are mortgage calculators all over the internet. Here's what you put in. Think about how much you would need to borrow for your mortgage, how long you think you're going to live there, and approximately what the mortgage rate is. Boop, 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 boop. Type all that in, and then, my human calculator. And they're going to tell you, here's what you're going to pay monthly. Now, chances are, if you're renting, you're going to be paying less per month. But remember, if you rent, you're earning nothing. There's no long-term investment. You get nothing out of it. And you need to remember, though, if you're buying, wait, I can afford that monthly payment. If you own that house or that apartment, there's a lot of other costs. That furnace breaks, it's on you. That lawn, you're mowing it. So you have to remember all of those costs. And the last thing, just figure in how stable is your income. You may have gotten a new job, a big raise, and you're going, great, now I can afford this big house. Work for a few months and see how that job works out before you're buying the big house. You got to figure out how stable is that income.
All right, great tips.
So when it comes to mortgage rates, I know there's adjustable rates, there's, it's just the numbers seem so high right now.
And they are, right? So if you were to get a 30-year mortgage right now, it's about 5.7% if you were, let's say, going to borrow $400,000. Now, that's a lot higher than it was just 6 months ago, right? You would be paying for that mortgage if you got it 6 months ago versus today, like $550 more a month. That's a lot of money.
Wow.
So you want to think about, what else can I do? You might consider getting a shorter mortgage, a 15-year mortgage where you'll get a lower rate, but you're going to have to pay more every month because you have to pay it off. Or, as you said, the adjustable rate mortgage, right? So that fluctuates with interest rates. That could be a positive, but remember, it fluctuates. You are rolling the dice. In a few years, it could go up. So you have to know you are taking that risk. Those are your options.
Okay. All right, so you've got your budget. You're going to try to get a mortgage. Can you negotiate a deal? Is there anything?
You can, but we know the real estate market is really hard right now, especially if you're buying a house. Yes, with interest rates going higher, the housing market is going to be less hot, but there's not a lot of supply out there, so you need to be realistic. I know you want the Barbie dream home, but think about, where do you want to live? What are you willing to sacrifice? And realize, because the market is so hot, you're likely going to be bidding against other people. So look for houses below your price point, knowing you're going to have to pay up. If you start at your high point, you're going to end up way over budget.
And sometimes you get so worked up, you may go over.
Correct. You get emotional, right? They stage the house well. They've got stuff cooking in the kitchen. You're dreaming of your 3 boys in the backyard. Don't do that. You got to go into that house stone cold sober.
So these folks have listened to your advice. They think, it's not now. It's not now. How do you set yourself up for success later on?
Perfect. You got to think about your long-term goals, right? Buying a home is probably the biggest purchase in your life. You want to be spending per month 30% or less of what your income is, and you need to think about your time horizon. Let's say you think you're going to buy a house in the next 5 years. You're saving up for that down payment. You want to keep it in cash. You want to have it in a high-yield savings account or something known as an I bond. This is a government-issued bond where you're going to earn the same along with what the interest rate is. Right now, it's paying a little over 9%. That's great. However, you got to hold on to that bond for 5 years. You have to have it for at least 1 year. And if you take it out between year 1 and year 5, you're going to lose 3 months of interest. But if you hold on for 5 years, that's a good nut. You're going to be happy with it. If you think you're not going to buy a house for at least 5 years, then you can roll the dice a little more, invest in the stock market. You won't have to weather so much volatility if you're a long-term investor.
So much great advice.
Stephanie.
A little less stressful.
A little bit. A
smidge.
By the way, we know that's a lot of information to process. So for more financial advice, anytime you'd like, it's today.com/onthemoney. Or you could also just text Stephanie Ruhle.
Text me, call me, DM me.
We'll put her cell phone
We'll go look at the house together. Yeah.
Hey, thanks for watching our YouTube channel. Find your favorite recipes, celebrity interviews, uplifting stories, shop our favorite deals, and so much more with the Today app. Download it now.